Dan Davis, and I'm joined with Sam Miller and Rich Karowski, representing ADK Wealth Advisory Group. Today our purpose is to shed some light on our investment committee's global economic and financial market update. So what our intentions are through these financial market updates is to kind of provide you with our macro outlook to help you as you're traveling through your financial life to have a better understanding of what's going on. So I think it's good to talk for a second on what is our view. And if you take a look at a slide that all of us have talked about in other meetings, it's called Alternating Secular Bear and Bull Markets. It's good to know that economies and financial markets go through these long cycles, and sometimes they're good, like secular bull runs. You can see that on the chart in green. You'll also see that they transition typically due to excess, where the financial markets and economies get greed and over-optimism driving to levels where we then go through these extended secular bear periods. It's awkward because when you're going through these secular bear periods, they're all different. And sometimes what you'll find is that you'll have a financial meltdown, but before the problems that created it are done, the markets start climbing back up again. As you can see from the chart that talks about cyclical markets within a secular market. So it's a paradigm shift when you see the markets climbing, but yet the news around you really is not that good. You start to wonder, are things better than what we thought? So it's our strong opinion that the secular bear market that we're in started around the year 2000, but that we're experiencing a cyclical bull run right now that really is being driven by what I'll classify as quantitative easing. And quantitative easing is a really hyphen-angled word that is printing money. In the summer of 2012, the United States Federal Reserve has been printing about $85 billion of new money, and literally using this concept called an asset repurchase program, where they go in and buy debt and creating artificial demand that really stimulates the economy and things like the housing market by keeping interest rates artificially low. Now, it's not all quantitative easing. There are some things that I think are really real, like, for example, the housing market. There's some things going on in the U.S. housing market that are very exciting, and I'd like Sam to weigh in on that.
5 years ago, the housing market was the mesh that united the global financial crisis. Let's look at how the market is improving and why this recovery has room to run. For every house built, approximately 3.5 jobs will be added. For most Americans, their biggest asset is their home. Higher home prices equal higher net worth, which equal higher consumer confidence, which equal higher consumer spending, and this circle will continue. The bottom line, analysts believe that over the next 5 years, housing will contribute 1% to the annual GDP growth, which is a large amount. The housing market is continuing to improve, and it will bring the economy with it.
One of the biggest developing economic stories today is the U.S. energy boom. This is a story that would have been hard to imagine 10 years ago, or really even 5 years ago. A recent Wall Street Journal article stated that U.S. oil production in May of 2013 has exceeded net imports. Now, this is the first time this has happened since the mid-1990s. Natural gas exports should grow. Right now, the cost of natural gas in Europe is 3 times what it is here in the U.S. The cost of natural gas in Japan is 5 times what it is here in the U.S. So there's definitely incentives for U.S. manufacturers to export their product. There's definitely incentives for companies in both Europe and Japan to buy that product. So expect that to be a growth factor here in the U.S. economy. And of course, with that export industry will come infrastructure build and supporting also.
So let's bring all this together. We talked at the beginning about wanting to have a map so that as you're sort of navigating through your financial life, that the information we're providing is helpful. So when I think in terms of our macro outlook for our investment committee, I think it's important to know that financial markets go through long cycles. We believe that we're in a secular bear market, and that right now the most recent run-up is driven by things like quantitative easing and housing, and that that cyclical bull run-up We don't believe that that's the beginning of the next secular bear. Rather, we think that we probably have some continuation of that run, assuming that one of two major risks of Europe or geopolitical risk doesn't blow up. We do believe, though, that when you get beyond, say, the 2013 period into that 2018 in that range, that we'll have another major market meltdown. Hard to say what the driver of that will be. But the good news is that we don't believe that we'll be in a situation where this goes on forever. We believe that the next secular bull run is around the bend, and that the mega trends that we talked about will be strong enough to push us into that. So, as many of you are clients of ADK Wealth Advisory Group, we'll take this information, answer any questions that you have in our follow-up meetings. We'll also make sure that we cover how this relates to your portfolio. We ask that if you've enjoyed this, that you would share it with your social network. And if you're not a client of ADK Wealth Advisory Group and you'd like to learn more about how we help with financial planning and what we do with risk management, simply visit our website at discoverindependence.com. With that said, we'd like to thank you for your time, your business, and have a blessed day.